And
This is the Tan Talk Radio Network.
The opinions, thoughts, and observations on the IRS Solution Attorney radio show are not legal advice. Facts and circumstances differ in every case. Do not take anything said on the show as legal or accounting advice. Always consult your lawyer or accountant before deciding how to handle any legal issue.
Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Welcome, welcome, welcome. This is the IRS Solution Attorney, Darrin T. Mish. Joined today in the studio by my lovely co-host, Katrina Madewell.
That's me. Welcome to the show.
How you doing?
Doing great. How are you today?
I'm doing pretty darn good, as a matter of fact. We have just an incredibly cool IRS train wreck of the week in our last segment today, so you want to make sure that you stay tuned to hear that. It's always fun to share war stories and share happy endings for sure.
That's the best, the train wreck of the week. It's my favorite part. That's why we got to save it till the end.
Yeah, that's why that's my favorite part of the show as well. But today, I think what we're going to do is we're going to talk generally about, the consequences of having IRS problems and state tax problems, and just kind of like a high-level overview on what you should do if you have an IRS tax problem or a state tax problem. Here in Florida, where we're recording, we don't really have state income tax, not for individuals anyway. But, this show goes out on a podcast to all 50 states, and we represent clients in all 50 states. So it should have some overlap and help some people around the country.
Absolutely. Don't forget to mention that you can help anybody in any state. Just because we're here, you represent people everywhere.
Absolutely. It's always fun to represent somebody on the West Coast because of the time difference, and heaven help us if they're in Alaska or Hawaii, because there's a 5 or 6 hour time difference depending on the time of the year. And so it can be a little bit hard to coordinate talking on the phone and stuff. But in this day and age, most people, even if they're local, come into the office one time, and then that's pretty much it. We do the rest by phone, fax, email.
Skype, Hangout.
Skype. Actually, we don't do a whole lot of live video, but I'm open to it. It's just that most people haven't quite figured that part out. Most people at home, I don't think, have a video camera, or I guess we could do it Skype.
I don't know.
But
most people do it on their phones, too.
My expat clients, when they're in other countries, we do Skype quite a bit because I don't want to pay for a call to Guatemala or Ecuador or whatever. So we just do Skype to Skype. It tends to work out.
In this day and age, why not? That's what everybody does.
I was doing one with a guy, about a year ago, and he was in Puerto Rico, and the bandwidth down in Puerto Rico is just not good. So we couldn't really get it done. But in most countries, the bandwidth is actually higher than here. So anyway.
So today's episode, we're discussing the consequences if you owe the IRS or state taxes.
Yeah, one of the first things that you need to look at or consider is, did you file the tax returns or not? That's kind of important because there's some pretty serious consequences if you don't file the return. I mean, the first thing that comes to mind is it's actually a crime not to file a tax return, and there's a 6-year statute of limitations. So theoretically, you could be criminally charged and you can go to federal prison, probably a Club Med kind of place, probably not all that bad, but who wants to go to prison? So it's probably a good idea to go ahead and file your tax returns if you can. And most people really can. So there are people that get kind of twisted up and they get kind of hung up on perfection, so they think they want to sharpen that pencil and get everything absolutely crystal clear, perfect. And I think that's probably a good ideal for most people. But when you're 6 years behind, 10 years behind, 30 years behind, I don't think we need to sharpen the pencil and get it exactly right. I think we just need to get close enough,
How does that play into what you talked about on some of the other shows where if you're filing these back taxes and you get a refund, then you have no penalty. But in more cases than not, I imagine people owe. So if they owe, what if they're looking for deductions to write that amount down, right? I would imagine maybe that's what holds them up.
Yeah, if you think that you're not going to owe if you sharpen the pencil and get every single deduction, well then okay, we probably want to do that. But by far, 80, 90, 95% of our clients, they're going to owe a big fat balance.
So you're just saying take that hit, whatever it is, the taxes you owe, the penalties, all that jazz, and then let you fix it?
Yeah, because, if you're going to owe $50,000 or $100,000 or $500,000, are you going to write a check even for the $50,000? I mean, most people, the answer is going to be no. Now, if they earn $250,000 a year or whatever, and they're going to have to pay it, well, then it's probably not a good idea to just sort of guesstimate your income and your deductions and be conservative and file returns with big, large balances. But, I get that question a lot. People are like, well,
I have to find all my stuff.
Yeah, they think they got to go find every receipt and stuff. And most people have, the fire, flood, hurricane sort of situation.
Gotcha.
Where there's sometimes legitimate excuse.
QuickBooks crash.
Yeah, I've actually had that happen. It's not fun.
I have too. That's why I'm laughing.
Usually people have a pretty good reason why they don't have any documentation, but that doesn't really help in the preparation of the tax return, right?
Right.
So one of the things we can do, and we do for lots of clients, is we go ahead and get a power of attorney for them, and we discreetly electronically get the transcript information from the IRS for the client. So one of the transcripts that we get are called wage and income transcripts, which are the W-2s and 1099s and 1098s and 5498s and all these, tax forms.
IRS code numbers.
Yeah, we get all those tax forms, and for some people, it makes sense to just go ahead and use that stuff to do the returns. And because remember, and this is not necessarily common sense, but remember that all the missing returns going back at least 6 years have to be filed before we can even start to resolve the problem. So if you haven't filed, last year's return, it's actually today, the day if you haven't filed 2014's return by the 15th of October or after the 15th of October, then you got to get that return filed before we can even help you to solve the problem. Does that make sense?
Yes.
So every return going back at least 6 years has to be filed, or we can't even begin to start to help you. So what I would say there is just, if you have to estimate, just be conservative in those estimations so that we can get started on resolving the problem.
So what happens after October 15th again, since that's like right around the corner, like we're literally less than a week?
So, every year there's millions of people that miss the extension date, and those returns will be late. And so if those returns are late, ultimately, if they're unfiled, one of the penalties that comes up is pretty harsh. I mean, the failure to file penalty is, 5% of the tax amount owed each month. Every month, it's 5% to a maximum of 25%. So if you never file that return, that's a pretty steep penalty. If you just file it late, then there's a different penalty. But it can, let's see, what is that penalty? It's 0.5%. It's 1/2 of 1% of the tax liability each month. So that's a huge difference. 5% versus 1/2 of 1%. So there's a really big difference. It's important to note that if you don't file the return, in many instances, what the IRS will do is they'll take that wage and income transcript information that I was just referring to, and they'll, benevolently go ahead and prepare a return for you. Now, interesting enough,
I never knew that until I started hosting the show with you. I had no idea that the IRS would actually file a return for you.
Yeah, and some taxpayers think, hey, that's kind of a cool idea, right? I mean, I saved the money in the tax prep.
How do you know if they do that anyway?
You start getting notices for a tax year you never filed a return for.
Gotcha.
And usually it's an eye-popping number that makes your head want to explode. And so,
gotcha.
And okay. So that's called a substitute for return, and sometimes in the business we call it an SFR. And if you have a substitute for return, I mean, those really excessive penalties for failure to file, the 5% of the tax liability for each month up to a limit of 25%, those get applied. Now, there's a happy ending for the substitute for returns. If you can file an original return after the substitute for return is filed, then the IRS 99 times out of 100 will accept your return, unless it's ridiculous, right? Unless you look at the return and it makes your face turn red and you start laughing. Then they'll go ahead and accept that return, and they'll abate the excess tax, interest, and penalties. So sometimes it's a good idea to file an original return, and sometimes it just doesn't matter.
So sometimes you just deal with the problem head on. Let's figure out what we can settle this train wreck for and move on.
So if the solution is going to be to file an offer and compromise, which we talk about on the show a lot, an offer and compromise is where you make a deal, you try to make an offer to settle for less. If you're going to file an offer anyway, and you have a bunch of substitute for returns, and let's say you owe $200,000, but if you filed original returns, you'd cut it down to $100,000. Does that make any difference for most people?
Not really. Not at that point.
I mean, that's sort of a rhetorical question. No, it doesn't really matter because most people aren't going to stroke the check for $100,000. So why are we going through the extra expense, effort, emotional upheaval, and all that to file those returns? So you don't really need to do that. So you would just go ahead and file your offer in compromise, and then you kind of move on. Now, if you filed the offer and it gets rejected for some reason, then you're going to want to go back and kind of reconsider. Hey, maybe we should file the original returns, and we can move on from there. There used to be a reason why you would always file an original return, and that was because, and we can talk about this more later perhaps, where some taxes can be discharged in bankruptcy. And it used to be we would file the original return and we'd wait a couple years, and then those would be eligible for bankruptcy. But there's some bad case law out there now that says that once an SFR, always an SFR. So once a substitute for a return, it's always kind of considered a substitute for a return, and so it's not going to be dischargeable in a bankruptcy.
Did something change in the tax law, or that's just kind of the way stuff went down?
Well, we have kind of an interesting challenge in our country right now, and that is that judges have a propensity to make law. So they read the statute and they decide what they want the outcome to be, and they go ahead and reason sort of backwards. And I'm not sure I'm even supposed to say that publicly, but you know, it is what seems to be happening. So there was some case law that came down a couple years ago, and it's really poorly reasoned actually, and the judge just doesn't like the idea that taxes can be discharged in bankruptcy. And since he's appointed for life, and his check comes from the U.S. Treasury, you know, he decided that, you know, these tax cheat kind of people aren't going to get the benefit of a discharge, and so.
So what do they do at that point? They have to take it to federal court?
Well, this case actually was a bankruptcy case, and then bankruptcy cases sometimes get appealed to district court, and that was a district court opinion. Now, the good thing about it is that district court opinion is not binding on the entire country. It's not really binding anywhere. You know, it might be sort of persuasive in the district in which it was decided, but there's some, you know, what happens is the government drags this argument out whenever they want to use it, and then, you know, what happens is in the context of the bankruptcy, in order to fight that determination, then you have to do what's called an adversary proceeding. So it's like a trial within the bankruptcy, and most people can't afford to do that. So
how costly is that? Just curiosity, rough idea, range and price.
Typically, most guys are going to charge hourly, and it's going to run, I don't know, $5 to $10,000 probably.
Gotcha.
So, you know, it might be worth it for some people, but the risk of not winning is, you know, substantial, and so most people aren't going to do that.
So what if tax returns are filed on time, but maybe they just didn't have the money to pay them?
Well, then we're going to have to go through a variety of possibilities for solutions, you know. If taxpayer sort of ignores the balances, which is pretty common in my practice.
Whoops, don't have the money. I think I'll just not take care of that right now.
Yeah, there's a bunch of bad stuff that can happen. You know, tax liens can happen. The government can file a federal tax lien, typically in the county where you own property or where you live. You know, it's common.
So it's better to not file and wait? Is that probably better? Or like, I'm just saying, like, you know, I'm just playing devil's advocate. And if I think I'm going to owe the IRS 10 or 15 grand and I just don't have the money and I want to take care of it, but I don't have the money right now, should I wait to do everything or just?
It's so cool having a non-lawyer co-host. It's so cool having a non-lawyer co-host because she asked me if I should, you know, publicly
you can't answer as an attorney.
If I should publicly tell the world they should commit, you know, crimes. No, it's probably not.
Tell me what I should say.
No, this is good radio. You know, you got to ask the question.
That would be professional suicide on your part, wouldn't it?
So I'm going to guess, I could be wrong, you can correct me, but I would say, you know, if I owed the IRS 20 grand and I didn't have the money to write a check, I probably would just wait to file it and wait to handle all of it until I could deal with it. That's what I would do.
Well, remember, though, that the late filing penalties are racking up, not as substantially, but they're still a half of 1% up to a maximum of 25%. So,
but the alternative is they can lien my stuff and file a federal tax lien? I mean,
yeah, there's a happy medium there somewhere. I'm not exactly sure where it is. But when the IRS files a federal tax lien, a lot of people think that the tax lien attaches to the address that they live at. So I get a lot of comments where people are saying, well, that's not even my house. That's my mom's house or my grandma's house or whatever. And the tax lien technically attaches to all of the taxpayer's property, real and personal, wherever it may be. So that sounds kind of fancy, right? What's real property? I think you know.
I know how we describe it in real estate as you know, if you were to take the house and turn it upside down, anything that would fall to the ground via gravity is personal property. Anything that would stay attached is real property.
I love that.
That's how I
definition.
describe it.
I've never heard that. That's awesome.
But
yeah.
now it makes sense.
Yeah, for sure.
So like when I walk into these places and they have these fancy built-ins that are screwed into the wall that they plan on taking, or like I sold this property on Bayshore and she had like 200-year-old French drapes and shutters that were old gates that were literally nailed to the window because that was part of the decor. We have to explain that that is actually real property unless you disclose it otherwise.
Aren't they fixtures?
That's real property. It's attached to the property. You can, if it's nailed into the wall and it's not something that would fall to the ground, that's personal property.
So I don't know how this came up in our family, but I have a little girl, and we're talking about moving, and she walked throughout the house, and she says, "I want to keep that chandelier and that chandelier and that chandelier," and I had to break it to her that those are probably staying, honey, and. There was some crying, and
you can take them. You just have to either A, take them down before you show the property, or B, disclose that right away.
Yeah, I told her, that could be part of the contract. That might be make it kind of harder to sell the house, So
usually it doesn't hold it up for that kind of stuff.
So it's the tax lien attaches to real and personal property wherever it may be. So technically, it attaches to the socks in your sock drawer. Does the IRS want your socks?
Oh no,
probably not. Especially if they're not clean. But it attaches to real property, so that's real estate. That's your house and stuff. But the address on the lien is not really operative. Not so much. It doesn't attach to that.
That's like your mailing address on the return, isn't it? Isn't that where they mail it?
Yeah, it's just your last known address. So this comes up quite a bit. It's kind of a cool little loophole, and I like loopholes. If they file the tax lien in either the wrong county, like the county where the real property is not located, or if they just fail to file a tax lien in a county where real property is located, then it doesn't attach to that real property. So let me give you an example. You have a primary residence in Hillsborough County, they filed a lien there, and then you have a beach house over in Pinellas County, and they either don't know about it or they just forget and they don't file the tax lien over in Pinellas County. It doesn't attach. That house is actually freely conveyable in Pinellas County, and the beach house, you can sell it and there will be no tax lien.
So it won't convey to that property, but the one in the county where it is, it does.
Right, and sometimes it happens, there's counties, there's communities are split. There's a county line running down the middle, like Lutz is a good example. It could be in Hillsborough County, it could be in Pasco County.
This would be a great one for the title person to chime in because I'm like thinking about this with my real estate brain. And when they do a title search, they're going to look for that kind of stuff because they look for judgments too, and they usually want you to knock them out.
And that's exactly why the rule is the way it is. That's why there's case law that says no. The tax lien has to be filed in the correct county because otherwise you wouldn't be able to convey good title. Right, because you can't expect the title researcher, I'm not sure what the term is for that person, but the person researching the chain of title to check for liens in every county in the United States. I mean, that would be ridiculous. No. So the people that live in those counties where they accidentally file the lien in the wrong county, they just luck out. We had one case where ultimately we settled it with a bankruptcy, and they lived in like Sarasota and they filed the lien in like Hillsborough. They're like 2 or 3 counties in the middle. They never had lived in the county where they filed the lien. It was just a boneheaded mistake. Filed a Chapter 7 and completely wiped out all the tax liability. The lien did not survive the bankruptcy, and they were pretty happy campers.
That can be a pretty hefty bill in some cases, too.
Oh, yeah, for sure. I mean, it's basically saved the equity that they had in their house from the tax bill. So I think we're about to break, and when we come back, we're going to go ahead and talk about a couple more solutions that come up with resolving IRS tax problems, and we're going to talk about some really fun news stories this week.
Hang tight. We'll be back in a minute.
Breaking rocks in a hot sun. I fought for law and a law won. I fought for law and a law won. I needed money 'cause I had none. I fought for law and the law won.
This is the Tan Talk Radio Network.
Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Ask me about an inside secret to save several hundreds of dollars on your annual homeowner's insurance premium. Text the word WIND, W-I-N-D, to 813-377-2775. Again, 813-377-2775. Hi, I'm Katrina Madewell, host of Tampa Home Talk. I'm going to give you market-appropriate, timely information regarding homeownership matters, because we want to make your everyday life better. Wherever you are in life, it's our mission to bring you good advice so you can maintain good credit, live within your means, and build wealth. My team and I are passionate about it. Love where you live, or I'll fix it. Tampa Home Talk on WTAN every Thursday and Saturday at 5 p.m.
This is the Tan Talk Radio Network.
Welcome back here at the IRS Solution Attorney. Something kind of unusual happened at the break, which is kind of fun. The real fun actually occurs at the breaks, and if you want to go ahead and watch us live, you can always watch us live when we're taping at WTAN.com or
TanTalk1340.com.
There you go, or Periscope.
And by the way, you're listening to Mr. Darrin Mish. He's our hostess with the mostest.
Yes,
Host
absolutely.
With the mostest.
See,
I'm your co-hostess.
I'm
Katrina
just
Madewell.
learning this radio stuff, so I'm Darrin Mish, the IRS Solution Attorney. But something unusual happened during the break, and that was Jeff, our producer, who you can't see if you're watching us live, actually had some really good questions about who has to file and things like that. And so I told him, hey, let's wait until we're back on the air so we can go ahead and answer those. So
Very good.
Go ahead.
Well, I have the face for radio. That's why that camera's not on me.
That's why it's behind the board.
Behind the board. I should be outside doing this. The question I asked, who has to pay taxes? Who doesn't have to pay taxes? Who is exempt from paying taxes? Do people on disability have to pay taxes? And who has to file and who doesn't have to file?
Okay, so for
And
the rest,
age. That one probably comes from a lot
add
too,
the
right?
age to it, yeah.
so okay, for the rest of the show, we're just going to go ahead and answer that question. But no, just in all joking aside, let's kind of break that down. If you have more than $400, it used to be $600, but I just looked it up. It's $400 now in self-employment income, so 1099 type income. Then you're supposed to file a tax return. It's sort of interesting. $400 is a pretty low threshold.
Where did they come up with the 400?
Who knows where the IRS
Who determines
comes out?
this arbitrary
Does that
number?
have to do with like the 1099s? They have to issue them for that dollar amount? Is that what it is?
I think you have to issue a 1099 if you've paid out over 600. So I'm
That's
not
what I
really
thought.
sure why there's a discrepancy between 400 and 600. But generally speaking, to answer that question, is Congress passes statutes, and then the Congress has allowed the IRS to promulgate regulations. And so, interestingly enough, regulations are not actually law. So it's debatable whether or not you actually have to follow them. However, that's an uphill battle. So what happens is Congress will pass a big broad law like Obamacare. Mm-hmm. And then in the Obamacare example, the IRS, published, tens of thousands of pages of additional regulations. And so all those have to be fought out in court ultimately if people have challenges to them. So I don't know how they came up with 400 versus 600 versus 6,000, that kind of thing.
No, that's income for people who are working. What about people who are disabled?
That would be self-employment income. So you don't get a W-2, you don't have taxes withheld. And so they really are going to go low for that money because, that's where there's a lot of people in our economy. They're kind of working in a hidden economy.
Like cash passing
Yeah.
kind of stuff.
Yeah, where they're just working for cash and they're struggling to get by. And so they don't bother with the whole tax filing thing. And my favorite story is the gentleman that came into my office. He was extremely nervous, visibly shaking, and he finally disclosed to me he had not filed a tax return since 1960. And so that's my favorite story.
And I guess he got a letter. That's why he actually finally came in.
No, actually, he was completely off the radar. They weren't after him because he was working in a pure cash economy.
So what made him shaky?
That's what I'm thinking. What made him pop up out of the blue?
Yeah, really.
Just the pure guilt of 45 or 55 years, whatever it was.
That's a lot of years with no sleep.
Yeah, that's he finally kind of cracked. It got to the point where it just bothered him so much that he decided to look for help. Now there was a happy ending because we filed the last 6 years of his returns. I don't think he owed all that much money, honestly, because he wasn't making that much money. And then we did an offer and compromise and ultimately settled the case, and he got to live happily ever after. He was really upset with himself because it took him 50 years to decide to resolve the problem.
And you made it look so easy for him, Darrin.
Yeah.
I don't know about easy, but
so if you have disability or Social Security, you still have to file a return?
no, you don't have to file a return if you're on Social Security disability, or if you're purely Social Security income. You do not have to file. There could be some reasons why you might want to file.
If you make money while you're on disability.
Yeah, if you have an additional income
There's
or taxes
a cap
withheld.
somewhere in there.
Yeah, there's some.
2,500, 3,000, something like that. Some ridiculous little amount.
Yeah, way to put me on the spot. I'm
I'm
not sure
sorry.
exactly what that number is,
You
but
gotta
there's
look that up.
yeah.
I'm sorry.
That good thing about law school is literally I don't think you really know how to do anything when you get out of law school except
Read.
where to find the answers. And I think that's pretty valuable. It takes 3 years plus an undergrad degree to for them to teach you where to look when you have a problem.
And you have to know how to dot your I's, cross your T's, and argue. Don't forget that.
Yeah, when I was a young kid, my mother used to always tell me, you're going to go to law school because you can argue with a fence post. And I'm actually not like that really anymore. I think it's been beaten out of me now after having practiced law for
Mellowed with
22
age.
years. Yeah, could be that.
After you have a kid, everything changes.
Well, it's because they argue with you.
You're argued out. So what about if somebody has retirement income, Darrin, and they're getting, I don't know, they're living off interest or annuities or whatever?
I think it's going to depend on if that retirement income was taxable or not taxable, right? So if it was some sort of situation where, like it was like proceeds from a Roth IRA, where there's no tax implications, then they're not necessarily going to have to file. But if it's from a traditional IRA where they have to pay the taxes, they're going to go ahead and need to file. Retirement accounts bring up sort of interesting scenarios where I cannot tell you how many times I've seen a large withdrawal from a retirement account that was taxable, and they made this huge withdrawal in December. Now, why would that be interesting? Because if they had cut that withdrawal in half and taken half in December and half in January, many times they would have paid,
A lot less.
way less tax.
Because that's how much they took in one calendar year.
Yeah, it's the calendar year, unless you're one of these crazy people who've elected some different tax year other than the calendar year. And for normal taxpayers, that's not really that common.
I was going to say.
So let's
Another
talk-
question.
Okay.
What is the red flag for the IRS as far as money being deposited?
Money being, well, I'll tell you a story about a case that I'm working on right now.
I do know they follow 10 grand because I have friends that track that stuff
Never put
internally from the
$10,000
banks. I
in.
know that's a red hot number, but you probably know a better number.
Okay, so everybody listening, they were the ones saying don't deposit
did it.
10 grand.
We did it.
9,000.
Yeah, certainly.
I did say it.
If there's a deposit of currency of over $10,000, and what happens is the bank is mandated to go ahead and notify the Treasury Department through what's called a CTR, a cash transaction report, that you deposited more than $10,000 in cash. Now, is that necessarily a red flag? No, it isn't, because all it means is that there was a report that more than $10,000 in currency was deposited. Now, does that necessarily mean you're a drug dealer, a money launderer, or anything like that, or
Do they
terrorist?
look at you differently? I mean, they go,
They
well,
might
not
at,
the red flag.
They might at the bank, temporarily. But if you have large amounts of money running through your account anyway, like in my business, a $10,000 deposit isn't really that big a deal.
So if I transfer the same $10,000 between two accounts multiple times, I'll drive them nuts, is what you're saying?
Yeah, you're probably going to create a tax problem too, because they're going to.
I'm just kidding.
If you get audited, they're going to count that $10,000 every time it goes in. So have that problem a lot of times on audits too. But I would say, I wouldn't worry about big currency deposits unless it's a very common, thing. Now think about like a convenience store owner. He might be making if he's really doing good business,
Okay.
they might be doing $10,000 deposits every day. Now, we hear about these forfeiture cases that come up from time to time where the government swoops in and like seizes the money. But I've heard a lot of those cases where there's a perfectly legitimate reason why they're dealing in so much cash. So that's really unfair. And it's one of the areas of the law that is really needs to be changed. I mean, the government should not be able to swoop in, take your cash, and then make you prove that it was clean.
Yeah.
And, Congress really needs to pay attention to this and clean that up.
So what about people that are not U.S. citizens, but they're making money here in the U.S.?
So, okay, my favorite story about that is I've represented a Canadian citizen living down in Mexico that had U.S. source income. And he ended up owing about $1.2 million. And I kept saying, so why do you even care? Why don't you just, why don't you even care? And ultimately the IRS has IRS agents in like over 140 countries. So he cared because they were coming for him in Mexico. And the type of business he was in, he wouldn't make the same kind of money if he didn't have the U.S. market. So ultimately what we did in that case is he ended up doing a Chapter 7. We wiped out $1.1 million in a bankruptcy. And then he had like $100,000 left, and we did an installment agreement on that.
That's pennies compared to over $1 million.
Yeah. So if you're a non-resident, if you have a green card, no matter where you live in the world, you're going to have to pay taxes on your U.S. source income. Actually, if you had a green card, you're going to have to pay taxes on your worldwide income. The United States is one of only 2 countries in the world where we have to pay taxes on our money, no matter where we earn it.
It's about that time. We've got to take a quick break. We'll be back in a minute. Hang tight. We'll be back with the train wreck of the week. You're listening to the IRS Attorney Solution Show. Back in a minute.
This is the Tan Talk Radio Network.
Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Ask me about an inside secret to save several hundreds of dollars on your annual homeowner's insurance premium. Text the word WIND, W-I-N-D, to 813-377-2775. Again, 813-377-2775. Hi, I'm Katrina Madewell, host of Tampa Home Talk. I'm going to give you market-appropriate, timely information regarding homeownership matters, because we want to make your everyday life better. Wherever you are in life, it's our mission to bring you good advice so you can maintain good credit, live within your means, and build wealth. My team and I are passionate about it. Love where you live, or I'll fix it. Tampa Home Talk on WTAN every Thursday and Saturday at 5 p.m.
This is the Tan Talk Radio Network.
Welcome back. I'm Darrin T. Mish, your IRS solution attorney, with Katrina Madewell, my co-host, and
welcome back to the show. Welcome back, Periscope watchers.
And we were answering some questions from Jeff, our show producer, and it's been a lot of fun. I wanted to kind of circle back for just a second and talk about U.S. citizens living overseas. Do they need to file tax returns? And the short answer is yes, they do. And they often don't know that they have to file returns. Just about every week I get a call or an inquiry or something from a U.S. citizen living overseas in the Philippines or Thailand or China or Russia, all kinds of countries. I've actually represented clients on every continent except for Antarctica. And I've been doing some research. There's at McMurdo Station in Antarctica, there's over 1,500 people live on that U.S. base. So I have a standing offer, and that is if anybody calls me from McMurdo Station in Antarctica with an IRS levy or anything like that, I'll take care of it for free, just so I can say every continent in the
Pro
world.
bono, that's a deal.
So I know there's guys down there who get wage levies and bank levies. There's actually 2 ATMs in Antarctica. They're Wells Fargo. That's kind of a cool fact, don't you think?
Mm-hmm. Yeah, I don't even know how you know that.
Well, what happens is, actually, I watched a documentary about McMurdo recently, but there's about 1,500 people that go down there during the Antarctic summer, which is our winter, and then there's like a few hundred that overwinter. They literally stay inside for 6 or 8 months at a time. And there's actually like a pecking order. They get irritated when the summer people show up because they've been like locked up together for months and months. But that's a standing offer. Anybody in Antarctica, I'm all yours. No problem. Just go ahead and hit me online and we'll take care of it. But yeah, U.S. expats overseas have to file tax returns. But there's kind of a cool thing for most of them, and that is called the foreign income exclusion. So it's between $92,000 and $95,000, I think. That first kind of $95,000 they don't have to pay tax on, and that's like Congress's little bone they throw at people living overseas. So we were talking at the break that if you're working in the Philippines, that's a great deal because the money is not as valuable there. Mm-hmm. But if you're working in Saudi Arabia or Dubai or something where you might blow through that in a month or two, because it's really expensive to live there, then that is not so good. But there's a news story I wanted to get to this week just because I loved the headline so much. It's Peculiar Man Indicted for Tax Evasion. So when I saw that headline, I thought, that's so cool. What was peculiar about the man? Well, it's kind of a letdown. It's about a man in Peculiar, Missouri, which I didn't know even existed, was actually indicted for tax fraud. And so he's having to deal with that. He apparently failed to file tax returns for 2005 and 6. And then for 2007 through 2009, he actually filed substantially correct returns, but left the tax line entry blank and failed to submit any payment. So according to the indictment, the total loss for those, few years from 2005 through 2009 was $264,294. I handle cases of that size and many times that size on a regular basis where people are not indicted and not criminally charged. But it's just a matter of this guy, this peculiar man, who was very peculiarly unlucky, I guess. Maybe he did something to, draw a substantial amount of attention to himself. It looks like, actually, he might have been what we affectionately call a tax protester, and that's not a pejorative term. I don't mean anything negative by that. It's just the type of person who...
I'm not paying the taxes. I'm not paying the government anything.
Yeah, they want to assert that it's unconstitutional or illegal or something like
country.
that. Yeah, there are people that say I'm a common law citizen.
I'm sovereign.
Or sovereign
I'm a
citizen.
sovereign country.
So the next story is fabulous. We have to have time to get to this one.
Okay, which one?
The next one is a man convicted of growing marijuana, guilty of tax evasion. People are talking about this. They've legalized it in some other places.
Yeah, and this is how they got Al Capone back in the day. And we talked about this before on the show, where if you're engaging in strictly illegal activity, technically, you're supposed to report your ill-gotten gains on, I guess, as a Schedule C. I'm not really sure. I guess, assuming that it would be substantially the same as getting a 1099 for your ill-gotten gains, your drug dealer proceeds.
So the Lincoln man was convicted in August of growing more than 100 marijuana plants, has pleaded guilty to tax evasion. He probably should have reported some horticulture income or something, right?
Yeah, exactly.
Yeah, fertilizer.
Actually, maybe he could do a Schedule F. This is some tax geek humor for you. Schedule F is for farmers.
I love it.
There's different breaks and whatnot for Schedule F filers. I haven't represented too many Schedule S. I have done a few, and they have a tendency to be people from the Midwest who moved down here, to retire or whatever. I think in today's day and age, you have to be a special kind of determined to be a farmer. You know, I don't understand with all the government red tape and labor problems and pestilence and everything you have to put up with. You have to be some kind of determined person with a very strong streak of wanting to gamble.
Or a really big green thumb.
Or in their bloodline or something,
yeah,
maybe. I don't know.
Yeah, for sure. You know, it could be a family thing, for sure. So real quick, let's do a recap of what you can do if you find yourself with a tax problem. I mean, the first thing that's pretty kind of obvious, people really know about, is an installment agreement, right? So if you owe $50,000 or less, it's pretty easy typically to get a payment plan, which we call formally an installment agreement. If that's not going to work, if you just can't afford to pay anything, then there's a situation where the IRS can declare that you are currently not collectible, or another phrase for that is hardship status. So if you can demonstrate, look, I cannot afford to pay anything on a monthly basis, they can kind of put you on the back burner and then throw you into hardship status, and they'll leave you there usually for a year or two at a time, sometimes pretty much forever.
Is there any debtor's prison still?
No, there's not debtor's prison, and that's why the Peculiar Man case is kind of interesting. He wasn't thrown in jail for not paying the tax. He was indicted. Actually, I don't know if he was thrown in jail. I want to take that back. He was indicted because he didn't file for a couple years, and then the other years he didn't file a correct return. So he's not being indicted for not paying necessarily. So we definitely don't have debtor's prisons. There's one exception: child support.
Really?
Yeah, you don't pay your child support. If you find yourself in front of a judge and you haven't paid your child support, he's probably going to throw you in jail until you figure out a way to pay the child support. And it's kind of interesting that people get really resourceful from jail, and they figure out how to get that child support paid.
So deadbeat dads, get your toothbrushes ready.
Yeah, yeah, for sure. Child support is one of those obligations you cannot ignore, and I think that's kind of a good thing, right? I mean, it's important that people live up to their obligations.
I don't know if I understand the whole driver's license thing, though, because if most of them can't get to work, how are you going to make a living?
Yeah, as a society, we've gone kind of crazy on suspending driver's licenses for all kinds of things, and I think they do that because they want to have a big stick, and they want to make sure that, hey, you don't have a driver's license, you want to make sure that the people should pay their child support or pay their traffic tickets or whatever. But then you run into these entire classes of people, usually blue collar, like lower income kind of people, who they can't drive. And a lot of people don't know this, but if you get pulled over for driving on a suspended license, time number 3 is actually a felony. So now you might be going to prison for up to 5 years for driving on a suspended license. So I get it. I mean, we shouldn't have people who have multiple DUIs and things like that are driving on suspended licenses. But, if you didn't pay some traffic fine because you couldn't afford it, or you didn't know about it, that happens rarely, but it does happen, then, people end up driving on a suspended license. And then the more that happens, and the more serious it becomes. It's harder to get out of that
hole. It's like a bigger hole. They just keep digging and digging and digging, and they just can't get out.
I think they call it habitual.
Yeah, for sure. Yeah. And it's sort of interesting. The more rural the county that you get pulled over, the more trouble you get in if you get caught. So if you get a driving while license suspended in Hillsborough County, I don't know, probably not that much is going to happen to you. You get pulled over in Sumter County, and they're going to put you under the jail because nothing ever bad happens in Sumter County.
You're in a whole heap of trouble, son.
Yeah, I'm not really picking on Sumter County. I just looking for a place.
They're looking for something to do.
Yeah, I was looking for a rural kind of place, where not a lot happens. So, I mean, there's the good part and the bad part of that. I'd kind of like to live in a county where there's, no murders during a year. That's kind of a good thing.
Don't mess with Grady Judd.
Yeah, he's out of Polk County, I believe. Imperial Polk County.
Right, Imperial Polk County.
So the next thing, if you don't qualify for hardship status, could be an offer in compromise, and that's where the taxpayer can make a deal to settle for less. There's a mathematical equation that kind of goes into that. It's basically monthly disposable income times 12 plus your assets equals the amount of your offer. So that sounded like a bunch of gibberish. So let me give you an example. If we could demonstrate that your monthly disposable income was only $100, $100 times 12 is $1,200. Let's assume that you have no assets, which is pretty common, unfortunately, in our society. Then you could settle your IRS case theoretically for $1,200. Doesn't really matter if you owe $500,000 or $50,000. I'm just making up hypothetical numbers because if we can successfully demonstrate that that's all that they could recover under that formula, then they're going to go ahead and take that deal.
And they're happy with that, or that's
turnip is still a turnip at the end of the day, right? You're not
I'm not sure if they're happy about it. I'll tell you a funny story about that. I have a case right now, or it's the liability is $2.2 million. We offered $754, I think. And that was because when we did the math, that's what the math came out to. And the IRS gentleman who might listen to the show, I'm not really sure. We've done business together for many years. He called me for the first time, to talk about that case, and he was actually angry with me. He told me he was angry about it, and I kind of laughed. I laughed and laughed, actually, and I said, well, let me tell you why we offered so little. First of all, it met the math equation, and second of all, when you negotiate, you don't offer. I know we're going to go up, but I want to go up from $754, not up from $10,000 or whatever. So that case isn't settled. It looks like it will settle eventually, maybe. No, they're not very happy about it. But a lot of times there's not a lot they can do about it. We'll talk about the train wreck in the week here at the end of this segment, I think. And you'll hear about a case that, they're happy enough to accept it. So
something is better than nothing.
Yeah, you got to think about the primary goal of an offer in compromise is not actually to recover the money. It's to get that taxpayer back into the system. So the opportunity cost for that, for not accepting the offer, is that taxpayer very likely is going to stay out of the system for many more years, or drop out completely, or continue to file returns and not pay their taxes. So you wouldn't believe, I see people year over year that owe $15,000, $25,000, $50,000 every single year. So typically, when we do an offer in compromise, they get back into the system and they kind of get straight, because one of the requirements is we got to get them current, which means we got to file all of all the back tax returns. We got to get them making estimated tax payments if that's appropriate in their case. And one of the conditions of an offer is they have to stay current for 5 years after the offer. If they violate that, if they have a new balance due during that 5 years, then the offer in compromise is defaulted and all of that tax penalty and interest comes back. So there's a really big stick at the end of that. And so I think that the compliance rate for that 5-year term is really, at least in my practice, is really good, because people get it.
Nobody wants to unwind that mess.
Yeah,
the incentive is there.
Now, I do have one that I can think of where they did default. There was some kind of, extreme life emergency that happened. I think somebody died and they ended up with another balance due. And it was just kind of sad. But ultimately, that person's just going to end up in hardship status, and the statute of limitations is going to expire. So let's talk about the statute of limitations real quick. A lot of people don't really know this, but there is a statute of limitations for the pay or for the collection of tax, and it runs 10 years from the date of the assessment of the tax. Now, what does that mean? What does assessment even mean?
Yeah, unwind all that gobbledygook.
Yeah, I'm not gonna give you the technical definition of an assessment, but basically, when you file a tax return and it has a balance due, the tax is assessed. If you then later go through an audit and they decide there's another nice number they're going to add, they're going to add tax, interest, and penalties, then that's an assessment. So you can have multiple assessments on the same tax year. You could have one where it was the tax due on your return on April 15th or whatever, and then if you get audited 2.5 years later, then there can be another assessment. And those both have 10-year statutes, and they're running concurrently, but they didn't start at the same time. Does that make sense?
Yeah.
So you could have one expire. Let's say if you filed a return in 2015, the first one might expire in 2025, and the second one might not expire until 2027, because there's two different assessments, so they have different statutes. So
we got 30 seconds left for our train wreck.
Yeah. Yes.
Okay. So
there.
lastly, we talked
about. By the way, before we forget, because we will, all of these stories, these news stories and more are posted up on getirshelp.com. You can hit the blog link at the top right of the page and get all of these stories.
And there's actually another site too. You can go to irssolutionattorney.com, and there's that's purely just the radio show. And the podcast is there. So lastly, some taxes can be discharged in bankruptcy. There's some complicated rules that aren't that interesting. Just think about the fact that the returns have to have been filed and they have to have been due for at least 3 years. If they've been filed for more than 3 years, then there's a decent chance that some of those taxes could be discharged in a bankruptcy. A lot of people don't think about that, and 9 out of 10 bankruptcy lawyers don't even know that taxes can be discharged in bankruptcy. So that's kind of a scary thought.
That is very scary.
Yeah. So what we do is we don't actually handle your bankruptcy, but we can help, we can help do the analysis to see if it's a legitimate solution for you. And we can refer you to somebody who can take care of you in that area if that becomes part of the weapons in the arsenal that we're going to use against the big bad IRS.
So I think it's right about that time.
So in today's IRS train wreck of the week, we're going to talk about a pretty interesting case. I think this case lasted about 3 years, and it started with the gentleman, the husband in this case, was a truck driver. He was an over-the-road truck driver, and he grossed a lot of money. Probably $500,000-$600,000 a year. But truckers work really, really hard, and he had to pay all of his costs out of that, out of that money. And so when he netted it down, he was just living barely hand to mouth. So what happened in this case was one of the issuers of the 1099s that he received accidentally, inadvertently issued 2 1099s to him for 6 figures each. So one was like, say, $300,000, and one was like $300,085. I mean, literally, they were that close. And it was really obvious that it was just a situation where the second one was the higher, and so it was supposed to be a corrected 1099, but we could never unravel it. We couldn't get the issuer to, retract one because most likely they had written off double, on their taxes. And so what we had to do ultimately is...
I can't even believe they can get away with that, really.
Yeah, it's really hard to unravel. So ultimately what happened is the IRS issued what's called a notice of deficiency, which is a scary looking letter that says you've been audited and now you owe us, in this case, another $100,000. But with a notice of deficiency, you get the right to file a tax court petition. So that's what we did, is we filed a tax court petition where we basically sued the IRS saying, nuh-uh, prove it. And so this was really cool. Usually these cases last for, a year or two, where there's a lot of back and forth between me and IRS appeals or me and IRS counsel, where there's a lot of negotiation and stuff happening. And frankly, in most tax court cases, we kind of split the baby and we kind of work out a deal. In this case, it was really, really cool. There's some vindication. In the shortest tax court case in the history of the world, I don't know, like a couple weeks after filing the petition, I immediately got a phone call from IRS counsel. He conceded, he stipulated, we win, it's over. He's like, I can look at it, obviously, it's obviously a mistake. And that kind of common sense is not that common in the government. So that was that was a really cool part of the case. But there was still $49,000 left for these taxpayers. So I saved them about $100 there, potentially $100 there, but they still had about $49,000 left over. Just this Monday, we got the letter that the IRS settled that case for $1,452. So pretty good deal. My favorite part of my job is to make those phone calls and explain that we've won to clients. And this was sort of an interesting phone call. English is not their first language. So I'm talking to the missus who is more fluent in English, and I explained to her that it was $1,452. And she was so sweet, really. She says, okay, and how much do we have to pay after that? And I said, no, that's it, $1,452 to settle the $49,000. And she, she started crying, and she was so happy. And so she got off the phone real quick so she could call her husband and let him know that their nightmare with the IRS was finally completely over. But remember, they got to stay current, file on time, and pay for 5 more years. So there's a pretty good deal there for the government, too. They're going to have a taxpayer who is like Johnny on the spot from now on, and their nightmare is over.
You're listening to the IRS Attorney Solution Show. I'm your co-host, Katrina Madewell.
And I'm your IRS Solution Attorney, Darrin T. Mish. Thanks for joining us. We're out.
Bye.